series. We're streaming live across various platforms like Twitter, LinkedIn and more, so you could be joining us from anywhere. Remember that we'll also post a recorded version of this live stream on our YouTube channel for your convenience. If you're watching us later through the YouTube recording, why not consider joining our lively Discord community? Stay updated about our upcoming live streams and interact with us in real time. You can find an invite link to this in the video description below. It's an excellent opportunity for you to ask strategy related questions and get immediate responses. It's a beneficial arrangement for anyone involved. We understand that due to various commitments, time zone differences and more, not everyone can join us live. In such instances, you're always welcome to watch the recorded version on YouTube at a time that suits you. Don't forget, our YouTube channel is filled with a variety of strategy of the week videos, so if today's strategy doesn't resonate with you, there are numerous others to discover. Right, without further ado, let's jump into it. This week we're focusing on a strategy that utilizes the Relative Strength Index, or RSI, the MFI, or Money Flow Index, and the MACD to identify entry points for long positions. For exits, we're again leveraging these three technical indicators and also including a fixed take profit and stop loss condition. The key appeal of this strategy is that it operates independently of TradingView signals, enabling it to leverage Coinrule's AnyCoin scanner. This function will tirelessly browse the market, identifying coins that fulfill our entry criteria, and trigger trades accordingly. Plus, this strategy is readily available as a template on Coinrule, simplifying the setup and launch. For those wanting a detailed understanding, the corresponding script for this strategy can be found on TradingView. If you're interested in conducting a backtest, it's completely feasible and I'll walk you through the process later on. Okay, so let's have a quick look at the broader macro picture first. So last Wednesday's FOMC meeting caused a temporary dip in equities and also crypto, but they've been on the path of recovery since then. You can see this dip here following the meeting. The Fed kept interest rates unchanged, which was in line with expectations, yet the tone and projections of the meeting, embodied in the updated dot plot, were decidedly more hawkish than most had anticipated. The prospect of further rate hikes during the course of the year was underscored by these developments. According to the revised dot plot, the average Fed member now foresees a need for 2 more hikes in 2023, pushing the interest rate to 5.6%. A noticeable increase from the 5.1% forecast back in March. Additionally, there was a striking coherence among the members' forecasts for year-end expectations, indicating a shared view that the hiking cycle will persist. Meanwhile, the European Central Bank made a contrasting move by increasing rates by 25 basis points to 4% since last Wednesday's Fed meeting. However, markets appear to be resilient in the face of the hawkish narrative. The 2-year yields have returned to similar pre-meeting levels at around 4.65%, and the 10-year yields have seen a marked decrease to roughly 3.72%. As for the crypto markets, they too experienced a slump during the Fed meetings last Wednesday. What was peculiar though was a sharp downturn that took place later in the day around 4 PM. The cause of this abrupt drop is still unknown, but it was amplified by the liquidations exceeding $100 million of long positions in that hour alone. The decline appears to have been led by ETH before rapidly extending to the broader crypto market. Additional concerns arose due to negative sentiment surrounding USDT, as a large number of users opted out of USDT, triggering a slight depeg. The proportion of USDT in Curve's 3 pool has since spiked from around 22% a few days before the meeting to over 70%. Furthermore, USDT now comprises approximately 98% of Uniswap's USDC/USDT pool. As arbitrage traders are likely to step in, a significant amount of USDT might be needed to be redeemed, a scenario for which Tether's CTO assured readiness. Now let's have a quick look at the Bitcoin 4-hour chart. From a technical perspective, the window before the FOMC meeting was characterized by restrained price fluctuations and low volatility. As we can see here, the Bollinger Bands were quite tight, which implies low volatility. However, as we can see, the landscape swiftly changed with the commencement of the FOMC meeting. Bitcoin initially plummeted about 4.65% in a span of 2 hours, only to bounce back with an 8% rally. This scenario of amplified volatility, concurrent with FOMC meetings, can serve as an opportune moment for scalpers or traders seeking to speculate on the meeting's outcome. Moreover, it's worth highlighting that a daily candlestick both opened and closed below the channel support, we can see this here, which subsequently retested the line as well. This occurrence could signal an impending shift in Bitcoin's bull trend observed over recent months. Okay, so let's discuss the technical indicators that we're using. Let's start with the RSI down here. So this is obviously one of the most popular tools used in technical analysis of financial markets. It's a momentum oscillator that measures the speed and change of price movements. Developed in 1978, the RSI oscillates between 0 and 100. Traditionally, the RSI is considered overbought when above 70, so above this dotted line here, and oversold when below 30, which is this dotted line down here. In other words, if the RSI value is above 70, it might suggest that the asset is being overbought and could be due for a price reversal. Conversely, an RSI value below 30 suggests that the asset may be oversold and could be due for a price bounce or reversal. The RSI is typically calculated using average price gains and losses over a defined period of time, which is typically 14 periods. Essentially, it is used to help identify whether an asset's price momentum is strong or weak. It's worth noting, like all technical analysis tools, that the RSI is not perfect and doesn't guarantee success on its own. It's typically used in conjunction with other tools and analysis methods to make informed trading decisions. Okay, the next indicator we're going to be using is the MFI. I'm just going to load this up. So it's the money flow index. You'll see it looks very similar to the RSI here. It oscillates between 0 and 100. This is again a momentum indicator that is used to identify overbought or oversold conditions in a price trend. It is often considered a volume-weighted version of the RSI. It incorporates both price data and trading volume. This is why it's quite good to use these in conjunction with one another. The MFI again uses a scale of 0 to 100, as I mentioned, and typically considers a value over 80 as overbought condition, which would indicate an impending price drop, and a value under 20 as an oversold condition, which could signal an upcoming price increase. So you can see the oversold and overbought conditions are just slightly different to the RSI one. The MFI is calculated by accumulating positive and negative money flow values, which consider the day's average price and volume, and then creating a money ratio. The MFI is a normalized version of the money ratio and expresses it in a range of 0 to 100. Again, it's important to note that like other technical indicators such as the RSI, it should not be used in isolation. Okay, and now finally onto the moving average conversion divergence, or the MACD, as most people. So sorry, I'll have to just close one of these. Here we go. So most of you will probably be familiar with the MACD. This is it down here. I'll just close these so you can get a better view of it. So the MACD is a trend following momentum indicator. This demonstrates the relationship between two moving averages of an asset's price. And the MACD line is calculated by subtracting the 26-period exponential moving average from the 12-period EMA. And the result of that calculation is the MACD line, which is this blue line here. And the result of that calculation is the MACD line, as I mentioned, and then a 9-day EMA of the MACD, known as the signal line, is then plotted on top of the MACD line and can function as a trigger for buy and sell signals. Traders may buy the asset when the MACD crosses above its signal line, and sell or short the asset when the MACD crosses below the signal line. Additionally, the MACD helps identify bullish and bearish market conditions. And when the MACD is above 0, the short-term average is above the long-term average, indicating bullish momentum. Conversely, when the MACD is below 0, the short-term average is below the long-term average, signifying bearish momentum. Again, like other technical indicators, the MACD is not foolproof and can produce false signals. It should be used alongside other tools and indicators to reduce the risk of false signals and increase the odds of successful trades. This is why we're using a combination of the three indicators at once when entering long positions. Okay, cool. So now let's discuss the entry conditions of the strategy. To enter positions, the strategy looks for the three following conditions to be met. The first buy condition relies on the RSI. We require the RSI is below 50, indicating a potential overselling and an opportunity for a price bounce back. Just like this here. The next entry condition relies on the MACD and waits for the MACD line to cross above the signal line, indicating a bullish signal. Just like this example here. And the final buy signal relies on the MFI and requires the MFI to be below 40, indicating that the asset is more likely to be oversold. Again, all three conditions must be met for a buy order to be executed. Right, let's go over the exit conditions. To exit, the strategy again utilizes the same indicators. The strategy will wait for the three conditions to be met before it exits, and also includes a fixed take profit and stop loss condition. The first sell condition triggers when the RSI is above 80, indicating overbought conditions and the potential for a price downturn. For the MACD, the sell condition triggers when the MACD line crosses below the signal line, indicating a bearish signal. For the MFI, the sell condition triggers when the MFI is above 50, indicating the asset could be overbought. So all three of these conditions must be met simultaneously for the first exit condition to be triggered. As I mentioned previously, the strategy also includes a fixed take profit and stop loss. If the price depreciates 5%, our stop loss condition will be met, or if the price appreciates 5%, our take profit condition will be met. Once either all of the indicator exit conditions are met simultaneously, or the take profit or stop loss conditions are met, a trade will close. Great, so now we've gone over the entry and exit conditions, let's take a look at backtesting. If you remember earlier, I told you that the script is available on TradingView, and this is it here. So you'll see initially you get a description of the entry and exit conditions. By the way, I'll include a link to this in the description of the video, so you don't need to find this manually if you're watching the recording. So it's called Multi-Index Momentum Strategy. So you'll see you'll get a description of the entry and exit conditions. This is just what we've been over, but it's here for your reference if you want to view it again later. So to backtest this strategy, you just quickly come and click this here. Come to the chart that you wish it to run on. So I'm going to test it on, like, say, XRP, the 2-hour time frame, and I'm going to paste it here. You can see, considering it's in my favorites, it shows up. And there we go. Then we get some backtesting data. You'll see once you adjust the time frames that the backtesting data will change, so we can see it perform much better on the 2-hour time frame. You can also backtest this on a range of different pairings if you want, but I'm just going to keep it on XRP because I've done a lot of backtesting and I know it performs well on this one. I'll just show you quickly how to change some parameters as well, if you want to tailor the strategy to your needs and get some updated backtesting data. So you just copy the code from here, come to Pine Editor, and then you can just delete this, paste this here, remove this one, and then you can just add it to the chart once you've updated your parameters. So for example, you could adjust the stop losses here and take profits. You could also change the sell conditions for the RSI and the buy conditions for the MFI. It's all pretty clearly labeled, so you should be able to edit most of this yourself. Initial capital as well. This is set to $10,000, but you could change this to $1,000, $100, whatever really suits you. Another important note is this default quantity value means the percentage of equity allocated for each trade. So this is 50%. So that means each trade will use $5,000 of it for the initial trade will. Commission value is also set to 0.1%, which is aligned to the base fee on Binance. And you could change this to a different number if you trade in an exchange with higher or lower commission value. Another important note, this is the time period for backtesting. So that means that this backtesting data that I just showed you earlier, so add this to the chart. So this data here is from the start of 2022. So since then, we've made a net profit of 43.27% with a total of 45 closed trades. And I was profitable 66.67% of the time, which is pretty good backtesting results. But if you wanted to just backtest this from 2023, for example, you can just change this number and click update on chart. Okay, cool, there we go. So I'll quickly show you how to run this strategy on Coinrule. As I mentioned, it's available as a template, so it should be super easy to just set up and run. Simply just come to Coinrule, create a rule, and just click templates up here and just paste it, and it will load for you. I'm not going to do that because I've already got it loaded here. So we can see here, these are our entry conditions, and this is our first exit condition, and then this is our second one. So either this is met first or this is met first, will X our trades basically. So I'm going to use our any coin operator here. We could use just XRP because we know it performs well on that one, but I'm going to keep it as any coin. That means it's going to trigger probably a lot more often than it would if it was just on XRP. I'm going to use the 2-hour time frame because, as we saw, it performed well on that time frame. I'm also going to buy $100 US with each trade. and I'm going to buy as limit orders, changes to market orders you want. And then if coin from action 1 has RSI greater than 50 in a time frame of 2 hours, and coin from action 1 has MFI greater than 50 in a time frame of 2 hours, and the coin is MACD crossing a below signal line in a time frame of 2 hours, then I want to sell 100% of the amount bought of that coin to my USDT wallet as a limit order. And then from coin from action 1 has price increased by 5%, this is our take profit condition, or or coin from action 1 has price decreased by 5% from the price at which I bought, then I want to sell 100% of the amount bought of that coin to my USDT wallet as a limit order. I want to execute this 20 times in total, and I'm going to call this rule multi-index momentum strategy. Once you're ready to launch, click this here. You'll get a little preview of your strategy, and once you're ready, just click launch. And there we go, the strategy is now live. Thank you very much for listening to the Strategy of the Week video. We're really excited to see what you create. And please don't hesitate to reach out if you have any questions